Hey everyone, it's Rob Foglia and Jessica Klein coming to you from Foglia Properties with Keller Williams here in Nashville. And as you can see in the title of this video, we wanted to dive a little bit deeper into forbearance, mortgage forbearance, kind of like what that means and kind of what to expect, and what to do about it, basically. And we've got a little infographic here that we'll pull up and go a little bit more into detail here in a second. However, probably one of the biggest reasons why we want to go through this with y'all here today is because part of our mission is to be educators here, to inform the buying public, the homeowning public, basically, our people, our tribe, let y'all know basically what's happening in the market, what to expect out there. And with forbearance being kind of a subject that we're hearing a little bit more about, and I'll show you all an article here in a second as to why we're hearing more about it, that it's definitely something we want to get the word out about it, right, Jessica?
Yeah, exactly. Just, trying to get information out there and give people some clarity. Forbearance is a really big topic right now, and it's something that seems very appealing. And we just want to make sure that before anyone jumps into something that sounds appealing on the surface, that it is something that's actually going to benefit them if they're going to choose to do it.
Exactly. Well said. And so, in case you haven't heard this term before, or maybe maybe you may even be considering it right now and you don't even realize it, because what forbearance basically is it's it's like delayed payments or deferred payments on your mortgage. And there's a few different like repayment types that we're seeing or that we're hearing about it right now, and we'll get into it. But there's so much confusion about it right now, so many unknowns. I think sometimes some people are even opting into it without either A, realizing it, or B, they're they're doing it without realizing the long-term repercussions of it. And so and the biggest reason why we say this is just to share with you why we wanted to do these videos. Is this information was brought up to us the other day, that almost 4 million mortgages out there are currently in forbearance. And I was blown away when I heard that number. I don't know about you, Jessica, but I just couldn't believe that number was so high,
Yeah, I mean, that's a huge portion. I mean, here, there's the percentage right there, 7.54% of mortgages. I mean, that's a huge number.
Actually, even a little higher. It
7.91, there you go.
Yeah. And which is amazing. I can't believe that. And I know finances are such a touchy subject for people, and I completely get that and respect that. It's a private matter for so many people, and yet I think we do a solid job keeping in touch with our people, our clients, and yet I don't think I've had anybody yet come to me with this subject, and it kind of worries me. Make me wonder, well, who of our people are going through this, and we don't even realize it yet,
Yeah. Or if someone, to your point, there have to be people who are connected with us who are dealing with this. I mean, statistically, probably 8% of the people we're connected with who own homes are considering this or have already gone into forbearance. And it's a private matter, and we want to make sure that even if you don't feel comfortable sharing with us or with someone else that you're considering it, that you get the information you need.
Exactly. Yeah. Again, well said. And the biggest reason we're seeing this number jump so high, I mean, it went up 0.5% over the prior week, and I would imagine it could go up even more next week, because some people, mortgages are considered late, usually after the 15th, and so with that being the case, some people could be holding off, waiting to do that. It's probably going to jump up higher at the end of May and continue to go that way in June, and it's the unemployment rate that's hurting us right now. I mean, as you can see here, it's a record high of what, 15%, almost 15% of which is amazing. And so anyway, not to be a downer about the numbers, but those are some things that are really that are concerning us, and why we wanted to go through this with you. And so we're going to do a couple of videos over the next few days, or the next, I should say, next week or so, about forbearance, and kind of continuing with this roadmap theme, to where you can see what's what. And basically what we wanted to do today is talk to those who are currently employed, because your situation may be a little simpler than an unemployed person's situation, or somebody who could be currently furloughed. And so, and the biggest reason I say that is, before you click that button when you go on to pay your mortgage payment and say, hey, yes, I need help, I want to delay payments, A, make sure you know what you're getting into. Make sure you know what the terms are of that. And B, you may be in a situation where you can go through and basically find a solution that would make sense for you. So like, for instance, right here, as you can see at the top, if you're currently employed, or maybe you're in a situation where money's getting tight, it's you and a spouse, and your spouse is employed, you're not, or vice versa, and you're like, man, it would help us if we didn't pay our mortgage for the next 4 months, right? Obviously, in that situation, it would. And you may though be in a spot where you have enough income coming in to where you could do letter A right here, and that's basically do a cash out refinance to get some reserves, because ultimately, I mean, what's that stat out there, Jessica, that I want to say it's over 70% of people have less than $1,000 in savings for reserves, or for for a rainy day fund, basically. And at the same time, what we're seeing right now is so many people have been in their home for basically for a minute. I mean, the amount of time that people are between moves, I guess you could say, it's widening in our country to where it's getting closer to a decade on average. And so because of that, and because of the appreciation we've seen, a lot of people are kind of house rich and maybe cash poor. Like, they've got a lot of equity in their property, and yet they may not have the liquid reserves on hand. Does that make sense? Am I getting that through clearly?
Yeah, I think that makes perfect sense. So, sometimes you don't, or actually most of the time, people aren't really in tune with what their house is worth today versus, comparing that to what they paid off and what's left on the loan, and just getting that whole picture and understanding how much cash they have in their house.
Mm-hmm. Yeah, exactly.
That's actually available to them.
Yeah, exactly. And the key is for letter A, it works if you're employed, or basically have income coming in to offset it, because it's kind of the catch-22 for mortgages and lending in general. And that is, lending is there to lend money to those who need it. And yet a lot of times the people who need it the most are people who may be out of work, or people who don't have the income coming in that they once did. And ultimately, at the same time, if you don't have that, it hurts you. So if you're currently employed, a cash out refi or a HELOC could be a great option. One of those two could make a lot of sense. I mean, I personally would probably err more toward the cash out refi, which is why we put it on here, because it's going to allow you to have that money set aside. You can put it in savings, and then on top of that, a HELOC, with so many things changing. I mean, who knows what could happen if a bank could basically get rid of it, close it out, and say, hey, we just you haven't taken money out of it, and we're just taking away your ability to right now. And so this, I think, gives you a little bit more security, the cash out refi. That's just my 2 cents on it. The second thing you could do, you may be in a situation where you're not, completely behind the 8 ball, and you may be in a spot where you just need a little bit of expense counseling. You may be able to negotiate with some of your creditors. We've got some great people we can recommend that can give you some advice on that expense counseling, help you to negotiate as well, can help you work on some of that credit stuff. If you need help with either A or B here, reach out to us. I mean, and especially I'd even be happy to kind of help walk through this stuff with you, the expense counseling, because, it's, like, we did it inside of our business recently, and I know I did it at home. I think you and Jack had as well recently, in terms of, you looked at all your monthly budgets and your expenses and said, hey, with our economy changing, let's get ahead of the curve and reduce some of these expenses and not be paying for things that we don't need. And that's what this is all about. So if y'all need some input on this, again, remember, we're here. We're not just here to help you sell a home or buy a home or to invest in real estate. We're here to really to be a guide for you and to assist any way that we can. And if it's out of our realm of expertise like this, we'll get you connected with somebody who can help you, and it is in their realm of expertise,
Yeah, absolutely. And I do, just really quick before we move away from A and B into C, I've heard a couple people who have been interested in forbearance when they're still able to pay their mortgage, because it's available to anybody, right? Like, lenders they're open to this idea in general.
Yeah.
And I think what we'll see going forward is, if you're able to pay your mortgage, keep paying your mortgage. Don't use forbearance as an easy way to save more money or anything like that. Like, use A or B to get more money into your account that you can use if you're able to pay your mortgage.
Mm-hmm.
Because forbearance is not forgiveness. It's like you still owe that money, and it's probably not on as good terms as you have right now.
Exactly. It very well may not be, and we'll get into that in just a second. And Jessica, you're 100% right. I mean, you know, these options that we just talked about, that's to help you get ahead of the game, you know, get ahead of the curve. And, you know, and especially because, again, we're talking right now, just to scroll up, again, this is the roadmap for if you're currently employed, you still have income coming in, you still have a job. So ultimately, you know, if you're in that position, do this and be in a spot to where if things somehow get worse, or, you know, like imagine, you know, if you will, I know it's beautiful outside right now. It's getting into summertime, you know, the flu season and all that's probably the furthest thing from our minds. And yet just imagine if round 2 of COVID and all this starts up in the fall again, and, you know, come October, come November, you know, we're having to get very hardcore about shelter in place, you know, like we just were in April. And I know, like, locally we're starting to come out of that, and there are parts of the country that aren't. And yet having those reserves, if you're still employed, could go a long way to helping sustain you through what could be a darker time. Who knows? So just throwing that out there.
Absolutely.
Now, so this right here is kind of the big word on here, the forbearance agreement. And we, you know, I'm going to preface anything that we're about to say with, you know, check the fine print in anything that you agree to, because when I say that there's, you know, a couple of different repayment types that we're seeing, this is not like an optional repayment type. Like, you don't get to choose, right, well, hey, this is how we're going to do it. We're seeing some lenders are saying one thing, some lenders are saying another thing. They're not doing anything to mislead or misrepresent. It's just they each have a different program. And so, like, some lenders, as you can see, like I talked to somebody the other day with Bank of America, and they were saying they're doing the top one, which I think is wonderful. I mean, they're doing to where they're deferred, the payments are being tacked on at the end of the loan, which is probably the most optimal scenario for anybody out there that's struggling right now. Because ultimately, that just means if, like, say you bought your home 5 years ago, you use a 30-year mortgage, your loan was going to be basically, you know, getting to the end in, just say, January of 2045. Well, if you deferred 4 payments, you're looking at May of 2045 now, and nothing else really changes. And it may make sense for you to do that, especially if these aren't really options for you. That may make sense. This one right here could also work. You know, just say you know, the example I just threw out there was you have 4 payments that you defer. You know, if that's able to be spread out over a period of payments, whether that's, you know, you're repaying those 4 that you've deferred over a year or 2 years or something along those lines, that may also be doable for you, for your budget. You know, you've got to see if it makes sense. The biggest thing that we're concerned about, and what we wanted to make sure, and honestly, the biggest thing that motivated me to get out there and start really talking about this were these 2.
Mm-hmm.
You know, you can see that the top one, deferred payments are due in full when the forbearance ends. And like what that means, so like just say hypothetically, you know, we're walking through this scenario, currently employed, maybe, you know, it's, you know, you and a spouse, you're employed, the spouse isn't, or vice versa. And you say, all right, well, I'm going to defer our payments. They're going to be due in full in 5 months. We're going to defer 4 payments, and on month 5, that means all 5 are due at that time. So, you know, imagine if you have a $1,200 or $1,500 mortgage payment, just say it's 15 for easy math, you're looking at what, $7,500 then due on month 5. I don't know about y'all. I think that's going to be a challenge for just about anybody, right?
Absolutely. Yeah. I mean, I don't know what I would do if I had 4 months due in 1 month.
Yeah.
And especially, I don't know what I would do if it were a surprise, which for a lot of people it will be.
I think so too. And then the second one on here that's a little concerning is just that there's no terms, and, you know, we'll figure it out as we go, and we'll figure it out later. And, you know, I like to think the best in everybody, and hopefully that the banks that are throwing that out there, they're just saying that because they're, you know, they just don't know, it's unprecedented, so they're trying to figure it out as they go. And yet, if I were in those shoes and I heard that, I would be concerned, because what if it becomes this? What if it does become
anything? Right? Like, it could mean an increased interest rate. It could mean any of these options above. I mean, it's like taking a job without a job offer, you know?
Mm-hmm.
Like, you don't know what they're going to pay you. So,
yeah, I couldn't imagine that.
Yeah, I mean, that last one with the no repayment terms, that's the one that scares me, honestly.
Mm-hmm. Yeah, I agree. I think that one, these bottom two are the big ones, and those are like I said before, those are the reasons why we want to get the word out on this, and why we want to make sure that that our consumers are hearing about it, our clients are hearing about it. So again, even if you're not, like if you're sitting there thinking and you're tuning into this video and you're thinking, well, I rent a home or something. If you've gotten this far in the video and you rent, thank you for watching our videos. But secondly, if that's the case and this doesn't really apply to you, who may it apply to that because again, we're not doing this to get a sale or something like that. We're really doing this to give back and help right now, and to make sure that y'all know what's going on out there. Because I mean, just imagine if it is that your parents, just say they choose to defer payments because one of them's out of work, like the scenario we were talking about, and then when they could have done this to cover themselves, maybe not even have a higher mortgage payment. Maybe they would refinance into a lower rate, and it would all just make sense. Because there are scenarios like that I hear about and see. There could be an option that just makes more sense for them, and especially if this ends up happening to them.
People may not be as cornered as they think they are. And sometimes it just takes looking at A and B to make that clear.
Exactly. So if you're taking up, if you get A and B don't work for you, C is the way you go. And especially if it's one of these bottom three, you've really got to start to prepare for repayment. Really, especially if it's one of the bottom two, but even this second one, you gotta start to prepare for repayment. Couple of things that you can think about. Retirement funds. There is kind of a, we all think about compound interest and compounding effect and how great that is for retirement. At the same time, if you fall into that 70% category where you don't have $1,000 in savings and you can't repay 5 payments at once, or even, just a higher mortgage payment over a 12-month period or a 2-year period, or, whatever the terms end up being, it may make sense to do that, especially if you're going to be you want to be in your home for 5 years, 10 years, 30 years, however long you're going to end up being there. It may make sense from a long-term standpoint. Just know that when you do, it could hurt your ability to retire, or just what you're going to get when you retire, I should say.
And that one, I would highly, highly, highly recommend talking to your portfolio manager or your financial advisor. Just someone who has a really good handle on what your finances are and where your retirement fund could be in 20 years, 30 years, 40 years, whatever it is.
Mm-hmm.
And I know that there aren't any penalties for early withdrawals on 401ks right now, and that's very appealing. Just make sure you're talking to someone who really knows the whole picture before you dive into this fund.
Well said, Jessica. Thanks for adding that, because you're absolutely right. Ultimately, it's not only just the thought about what could happen long term, but maybe there's a way around it that they know of, even that you haven't thought of yet. Or if you haven't reached out to us and you just went down that road, they may be able to help you. And if you don't have a great financial advisor, let us know. We can connect you with somebody. And then letter B here, I mean, this is why we talked about it up top here, is that if you're in a spot where you can do a cash out refi, you can, even if you do that and say a few months from now you get into trouble, that's where you could have the reserves to actually go through and get it all taken care of,
Yeah, absolutely.
I did want to just add this at the very end, only because ultimately, if somebody is thinking about selling in the next 3 to 5 years, and they're thinking, well, we've got to go through, we're going to have to go through forbearance, we're in a bad spot. It very well may make sense to do letter A and to eventually get to letter B right here, because I for one, and I don't know, nobody knows what the market's going to do long term. I do think though that we're at the very least going to level off, maybe go down a little bit in value. I mean, I know right now, like the market of the moment videos we've done in the past, we've seen it's still a seller's market, but we're still very early into this economic change. And it could very well be 6 months, 12 months from now that we're seeing a strong buyer's market. Maybe we are going down at that point in terms of values. And it may make sense, instead of taking on, the expense to do a cash out refi, or to go through and have to have all these deferred payments be due at in 5 months or whenever it is. It may make sense to do this now while the inventory is low, while the market is still as strong for a seller as it is, and then go into letter B, to rent, maybe rent for a year, and then, let everything recover, get your footing under you, and then go back and we can get you another home, or maybe even to downsize right now, as the market dips, and buy back in at a reduced price. So does that make sense? I don't want y'all to think that we're sharing this with y'all to get you to sell your home, because that's not at all the point of this video. It's just for those that are like, we're absolutely going to sell in 3 to 5 years, like the people that are out there that your kids are about to graduate high school, and you're like, as soon as they do, we're going to downsize and get that cabin in the woods or whatever it is that you want to do. That's where this makes sense. Not just because you're thinking about selling in 3 to 5 years because you want you want that larger backyard and stay in the same school district and nothing else really changes, but not for those luxury type of moves. It's more for like, my life is changing in the next 3 to 5 years. It's planning to change, and it just may make sense to do that now. Is that coming across the right way, Jessica?
Yeah, I think that's exactly it. And really, I mean, the selling aspect should be looked at exactly like any of these other topics we've discussed. I mean, get all the information, and if you are considering the 3 to 5 years, we can help you look at the market, decide what the house may be worth, how long it might take to sell, that sort of thing, any work that might need to be done. And if it makes sense, then you can take next steps. But definitely looking at all these things above this, this selling section, they're in this order for a reason, essentially. So go through all the steps, get all the information, and then make your decision.
Exactly. They're in this order for a reason, because, and that's honestly the reason why this is at the very top, the cash out refi. Like, we're not in the lending business. We're not mortgage people, so like.
Yeah, we don't get anything.
Yeah. Yeah. I just think this would be a smart thing to do right now, if you're worried about reserves, if you're in that, hey, we've got $1,000 in the bank in savings and that's it, and in that category, because you never know what could happen, how things are looking right now, and this could be a way to get yourself out of that situation where you're kind of like house rich and cash poor, to kind of balance that a little bit. And, like, in fact, I'm thinking, I won't throw the name out there, obviously. However, somebody that you introduced me to, Jessica, who, he bought his home like 10 years ago. He still has a high interest rate. He's got a ton of equity in his home, and I think he's doing all right now. I haven't heard of him being in any, like job trouble or anything like that. And at the same time, he could very well do this cash out refi and probably even lower his payment, because his rate's still high. He probably still has mortgage insurance on his loan, and it's something where he could then pad his bank account while and get that extra security while just helping himself out long term.
100%. And there are so many cases like that. I mean, I was even talking to my grandmother the other day, and she was in a position like that, and she's like, "Oh, I'm definitely going to do that." Yeah. She has 6% on her mortgage, something like that, and it makes a lot of sense.
Exactly, and just go back to that video we did, I think it was last week, on interest rates, and you'll see exactly what I mean. If you bought a home during those peaks, or when the rates were higher, it probably makes sense to look at a refi here sooner rather than later. Jessica, what didn't we cover on here? I know we're probably pushing 25, 30 minutes, I'm guessing, on here. I don't have the timer up. But what haven't we covered that we meant to?
Nothing that I can think of really on this sheet. I will say, if anybody wants a copy of this to print out or to share or anything, I mean, you can just share the video, of course. You can also email us for a copy of this, and if you have any extra questions. If you are someone who's in the unemployed camp, like Rob said earlier, we're going to be doing additional videos next week that'll cover that, because it's a little bit more involved. And we can also give you that information earlier if you're needing to make a decision sooner. So just let us know.
Yes, thank you for saying that, because you're right. Like, I believe our next video we're planning to do to go live on Facebook on Tuesday at 11 Central. And so, yeah, if you're in that on that unemployed side, you know, and time is of the essence for you, reach out and let us know. We wanted to put this one in here first, mostly because it was kind of the easiest to digest info when we also explained forbearance. I think that made the most sense. So, you know, and I'm glad you said that though, because yeah, if you are needing help sooner rather than later, reach out to us. You know, again, if you know somebody who is needing help, either reach out to us with their info, send them our info. I mean, I know money is such a private subject for people. I totally get it. You know, it's all confidential when you talk with us. We're just here to help and help be a resource and guide for you.
100%.
So, y'all, I appreciate y'all checking this out. We'll let you go here. However, if you need anything, you can email us, info at foliaproperties.com. Give me a call, 615-591-5665. Like our page on Facebook, Foglia Properties. If you want to check out these live videos, we actually do it on my personal page. So follow me, friend request me. I'm absolutely happy to connect with anybody watching this video. Rob Foglia on Facebook. I'm sure you can find me. There's not too many of us out there. So, well, awesome. Anything else we want to add?
No, I think that's it. We'll see you next time.
Awesome. Thanks, y'all. Bye.
Bye.